How's it going, everybody? It's Stas here. Welcome back to another video. So I want to break down my 5 biggest swing positions right now in the stock market. We're going to go over why I'm in these stocks. We're going to break down some charts, my thoughts on these stocks, and of course, we're going to go over my plans when I'm looking to buy more, if I'm looking to buy more, when I'm looking to sell out, lock profits. So if you guys find value, hit the like button, subscribe, make sure to take a sip of your coffee. You're going to need it for this video. And check out my Patreon if you guys want my buys, sells, call outs, morning update videos, plus more. All of that's on Patreon, link down below. And with that being said, let's get right into the video. And before we even go over my 5 biggest swing positions right now, let's go over what the markets have been doing today. And let me tell you, it's been a freaking volatile day. We can see here SPY is down literally 17, 20, 19 cents as I'm filming this video. In other words, it's at break even, and we've seen a bit of a relief rally today so far after getting obliterated in the pre-market and overnight pretty much in the futures market. If you guys have been paying attention, SPY yesterday, let's take a look here at what happened yesterday first. It was at 428, 427 in the pre-market, and then we ended up seeing a rally throughout the day, all the way up to about 435, and then during power hour yesterday we got rejected right at that 20-day 180 SMA, which we talked about yesterday on YouTube and on Patreon, and then we started selling off aggressively after market hours yesterday and pre-market today. And if I pop up the intraday chart, you guys can see we actually hit 426 at 5:40 a.m. on the East Coast. So pre-market, we got hit pretty hard. We were down about $9 from the peak yesterday, and then at about 6 a.m., that is when the market started seeing this relief rally, and it's pretty much been up and away ever since that point in time. Now, we're right by that 180 moving average again on this 20-day chart. There we go. We got a SoFi alert just now, which I'm not going to be talking about in this video, but if you guys subscribe, hey, maybe I'll talk about it in the next video later today. But now we're about to test the 180 moving average on this 20-day chart yet again. So this is another moment of truth. You know, now that SPY is turning green, it's no longer at break even. We're starting to push up a bit. Who knows? Maybe we do end up breaking out. Maybe we finally get out of this downtrend, or maybe this is yet again another bull trap. So we have to watch it, pay attention. And another thing I'm noticing here is we didn't take the low out from last week. I believe this was on Friday at 425. In fact, I'm seeing a bit of a triple bottom there. So if we start breaking out, this could be the start of a triple bottom breakout, but we're not there yet. I don't want to get ahead of myself and ahead of the markets because we know how that goes. So let me know your thoughts down below in the comments. Make sure to hit the like button if you guys are enjoying this video and find value in my videos in general. It really helps me out in the YouTube algorithm. And now let's talk about my 5 biggest swing positions right now, and maybe we'll do an honorable mention at the end if we do have time, so make sure you guys stick through this video. Number 1, and these are not in any particular order. I probably should have done these in order in terms of biggest to smallest, but it doesn't really matter. All you guys got to know is these are my top 5 right now. Number 1 is Wynn Resorts, ticker symbol WYNN. There's a lot going on with this stock at this point in time. There's a lot going on in China in general, and with Wynn having a lot of exposure to China in terms of Macau, their massive resort out there, you know, the casino business, the gambling business. I mean, they have a huge footprint in China. This stock has gotten hit pretty hard. I mean, it was just a couple weeks ago over $100 per share. It was at 105, and the first day we saw this collapse, if you guys remember, it went from 105 to about 91. That was back in the middle of September. That's when I bought. I actually bought at about $91, and I'm still holding on, and I'm looking to potentially add more to that position now that we're at $84, and I believe this one is probably the most risky out of the ones that I'm in right now. I'd definitely say it's top 2 in terms of risk. but the reward is big time. I think this could be a $110, $15, $20 stock in a couple of months down the line, especially as the whole gambling license situation over there in China gets resolved. COVID starts dying down a bit, which I believe it will ultimately over the next couple of months, which has had an impact on Wynn's business and the stock price as well. So I'm personally in here at $91, knowing, well, I'm well aware that we're still within the downtrend, and I'm okay with that. And I'm just going to continue buying it, now that I'm, buying in under 100. And I've said it before, under $100, I think Wynn is a good bet. And I'm not telling you guys that for you to go buy it. I'm just saying, for me personally, for my analysis, and of course I have a longer term time frame on this. It's more of a midterm swing trade. Hey, I think it's a good bet. So number one, we got Wynn Resorts, and number two, we have Adobe. And again, these are not in any particular order. Adobe is one that I've been looking at for a couple of weeks now. I've been waiting for a pullback, and we finally got it. It hit 670 back in the beginning of September, and during this sell-off, it's gotten all the way down to about 550, putting it very close to a bear market. I mean, it's down currently about 15-16%, and at its lowest point, it was down close to 18%. And I'm personally now seeing a bullish divergence. You guys can see the RSI has been strengthening the past roughly week or so, a little bit over a week, as the stock has still been downtrending. So this could be a sign of a reversal coming. And before I forget, my average cost on Adobe is $582 to be exact. So I'm down a very small amount on this position. And looking at the longer term time frames, I really like it, right? You guys can see buyers are stepping in, volumes kicking up right around this 180 moving average on the yearly chart, which has been support over the past year. And on the 3-year chart, we're seeing buyers step in above that 50 moving average, which has also been support over the past 3 years. So I'm long Adobe, and I'd definitely buy more if it were to dump down to the mid 500s again, maybe down to the lower 500s. I'd be a buyer. So yeah, Adobe, I'm long at 582, and I plan on selling this one probably mid to low 600s. I mean, I'd be happy to sell out anywhere from 620 to about 630, right around this main 180 moving average on the 4-hour chart. And another one that I'm in, which is rocking and rolling today, is Upwork. This is currently up 5%, up over $49 per share, and this is one that I'm up on. I'm actually in at $47.70, and this is an interesting one. I'm not going to lie. This is one that I considered earlier today, and I'm actually still considering maybe locking in some profits on, because again, I'm in at $47.70. Now it's at $49. I'm up $1.30 on the position, and I own a good amount of shares of it. And what we're noticing here is with today's move up 5%, we're moving above the moving averages, which is great, but we're actually approaching a key resistance towards the top of this wedge. You guys can see we've been making lower highs and higher lows at the same time. So at this point in time, guys, if we start pushing to 50, maybe mid 49s, even today, tomorrow at some point, if I didn't already lock in the profits by tomorrow, I might I might scale out a little bit, just because I don't want to get caught in this dumping right back down towards the bottom of this wedge, which could be anywhere from $45 to $46, if that makes any sense. So since I'm already up a good chunk right now, nothing crazy, I'm up like 3-4%, which is still good because I bought this like last week. So hey, 3-4% in about a week, a little bit more maybe, I'll take that. And sure, if it breaks out of the wedge here, we could see a huge move, and that is where I'd consider re-entering, right? Just to play it safe, because if you're not locking in profits, guys, you're not making any money. If you're up on paper, that's great, which I am right now up on paper, but if you're not locking it in, you're not making any money. It's just like you're up on paper, which really doesn't mean anything. So I'm considering locking in profits towards the top of the wedge here. If it breaks out, maybe next week or something, later this week even, I might even consider hopping back in. So Upwork, I like it. Up on it. DraftKings is another one that I personally like, which I don't plan on selling anytime soon, like Upwork. This one I'm in at about $50.20. I've been buying it the past week or two. I bought some at $52, $48, so I'm in again at about $50.20. And by the looks of it here, DraftKings uptrend is continuing, no doubt about it. We're holding a higher low here at about $48, $50 per share, and I'm also seeing a pretty nice looking bullish divergence on the 4-hour chart. So now I'm really just waiting for that pop out of that 50 moving average, which I think could get DraftKings back to the mid 50s, because the 50 moving average here on the 4-hour chart is right around 50 to 51, and it's very clear that has been resistance pretty much throughout since the middle of September up until right now. So if we start getting out of there, there's some headway to 55, where that is where I'd consider selling a little bit, and maybe I'd let the rest ride to about 60. That's where I'd sell the rest of my position. And the last one here, let's see how we're doing on time, is JWM. This is one that is probably, remember, like I said, WIM is the most risky. I'd say JWM is likely the second most risky here, because we all know what's going on with the supply chain problems that's hurting a lot of these retail stocks. I mean, you guys saw what happened to Bed Bath & Beyond. It was down 30% in a day. Best Buy even, I believe, got hit. JWN's been getting hit after their most recent earnings report, and I'm in this one at about 28.50, I think, maybe a little bit higher than that, and I am admittedly down on the position, but I've been selling a bunch of covered calls on it the past few weeks. I think I traded covered calls on it 2 or 3 different occasions, so I made some premium, I made some income while holding on to the stock. And if you guys didn't check out my covered call video, you should do that. Go in the search bar, type in Stasser Fest, how to sell covered calls, if you want to know how to do that and how to make extra income by simply holding on to the stock. And one thing worth mentioning is you have to own at least 100 shares to do that strategy, selling covered calls. So go check out that video. And yeah, I mean, that's pretty much what I've been doing. Now that I'm down in the position, I've been selling, 28, 29, $30 covered calls, collecting that premium, and pretty much waiting for JWM to start ripping back up. Because ultimately, I do think heading into these next couple of months, JWN does have some headway up towards the low to mid 30s, at least, in my opinion, towards the top of this channel, which again is into the low mid 30s. So overall, guys, that's pretty much it. And if you guys did stick till the end, we are 13 minutes in, but screw it, I'll give you a bonus. I'm also in Boston Beer Company, SAM. This one's ripping today. It's up 3.3%, and this is one of my smaller swings, which is why I didn't include it in my top 5 biggest ones, because this one I only own a couple of shares of. No kidding. Like it's a small position, and I'm looking to maybe add more into it, as it's very oversold. And my average cost right now is right around $5.20. I think $5.22 to be exact. So I am up a tiny bit, but the truth is, this is a mid to long-term swing, a couple of months at least. I'm not planning on selling it anytime soon, because I think it's oversold. And ultimately, on the 3-year chart, we're noticing we're right by the main moving average, which I believe we could recover above, since we're super oversold right now. And on the 20-year chart, we're on the 50 moving average, which has been support over the past couple of years. So I'm holding on to Boston Beer Company, JWN, DraftKings, Upwork, Adobe, and Wynn Resorts. And I'm not really looking on selling any of these in the very near-term future, other than Upwork, which if you guys are in my Patreon, you'll get all the alerts on when I'm buying and selling. And again, if you guys are interested in that, that's linked down below. You also get my morning updates, which I do every single day. And I just post all my trades there, everything I'm doing, and you have more access to me. So if you're interested in that, check it out, linked right down below. And that's it. Make sure to hit the like button, subscribe, drop me a comment, let me know your thoughts, and I'll catch you on the next video. Thanks for watching again. As always, keep crushing the markets. Stay safe out there, guys. Peace out.